Greetings, everybody. This is Jeff Scott, and this is my weekend review. Today is June, let me get this right, 14th, 2020. I titled today, Short-Term Correction or Something Worse. Here is my email address if you would like to contact me. Get this into screen mode. First, with a disclaimer, this is for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I paid for the tools that I use, and no one pays me to say good or bad things about them. I am truly independent, and trading involves risk. You alone are solely responsible for any investment decisions you make. And except for time to time when I sell my recent vintage computers, thank you to the two people that just bought them, or when I have an annual educational program, I have absolutely nothing to sell you. Be your own guru is the style of my trading. I learned CanSlim, improved by a number of people, Gil Morales and Chris Katcher, Ian Woodward, John Person taught me how to trade, Van Tharp, position size money management, and Sagar, who continues to amaze me with his great tools at Superior Profits. I have a lot of toys, a lot of software, but really all I need is TradeStation or Thinkorswim. Genesis is not necessary unless I'm deciding to trade futures. And then I use HGSI during and after the market for most of my analytics. EdgeRater, which automates a number of things. And then within TradeStation, Thinkorswim, I have Sagar's and Dr. K's tools, as well as Sagar's freestanding Q, Edge, Finder, Vital, and Index. Here's the website for HGSI, highgrowthstock.com. Free 30-day trial. Under investing strategies, you'll see lots of movies by me. And by the way, I don't make a penny if you do this, but I think it's a great product, and that's why I talk about it. Stock patterns are cyclical. Where are we today? Well, we were up here where my arrowhead is in February. On March 23rd, we clearly bottomed. We've had a wonderful run off the bottom with a couple of small pullbacks. And then the question is, are we in the midst of one of these pullbacks? Or are we in the ready for some type of a further retest? I have no obvious answer since the market's not open yet, and I have data that would support both ways, so I think caution needs to be employed. Caution to me is raise cash, smaller positions, sell out of the money premium, and I bought some contra ETFs, and I bought puts on some of my long positions. Now, hard to believe that it was a tough week when one looks at Friday's sector review, which looks like a sea of green. Keep in mind that Friday was Friday and not representative of the entire week. Major markets tell a story. And before I go into Thinkorswim, let me start off my Q Edge real quickly. Okay, well, that's loading. Let's go into Thinkorswim. And let's look at the major market indexes. You could be a bull, you could be a bear here, and I could make the arguments kind of both ways. So I'm going to try and be neutral and let you make your own decisions. Here is the NASDAQ, or the S&P E-mini futures. High of the year was right around here in the middle of February. Brisk sell-off, bottoming on the 23rd of March. A very nice recovery. Did not get to the prior highs. Did break above the 200-day moving average. The 17 is trending up and crossed above it. The 50 is heading up. And I think the 200 is actually turned up. Those are all bullish. We pulled back hard this week on Thursday. We pierced the 200, closed at the 200. Friday, we opened below the 200 and traded up on the day. If you want to be bullish, and this is the futures. Remember, it may look a little different than the cash markets. You could say we corrected back to the 200 and we bounced. That is true. If you want to be bearish, you could say we did it on lower volume. And we have a person sell signal came in here. Just quickly look at a weekly on this one. I know I'm going to screw myself up on this stuff, but let's see. Notice what we have here. we have a bearish engulfing pattern on the S&P futures. Now we're going to look at the cash and see that it may or may not look the same. But we'll come back to that. Let me switch back to the daily. Regardless, to say this lovely market rise is at least taking a pause here. If I look at the NASDAQ futures, same pattern, except this one did take out a new high and held at the 17-day. And the 17's above the 50, above the 200. They're all clearly up. That's a pretty bullish pattern. And we'll see if this doji here turns out to be a reversal day and we go higher on Monday. Wouldn't that be nice? Now let's take a look at the Dow futures. Again, we look a little different here if I go the right way. And you can see the Dow futures did break above their 200-day moving average. But unlike the S&P and the NASDAQ, they've closed deeply below them, had a nice bounce on Friday, but clearly weaker than their others. If I look at the Russell futures, similar to the Dow futures, so the Russell had the worst week and the best day on Friday. Go figure. If I look at the VIX, you can imagine the VIX popped earlier in the week on Thursday and then had a pullback on Friday, but still stopping above the 50-day moving average. And if I look at the dollar really was weak, and then the dollar bounced a lot ever since Jay Powell spoke. So I think this market could go either way, which is not what you want me to tell you. You want me to tell you definitively we're going up or going down. Talk to me at 9:31. I think that the market's at a place where it could bounce, but as you'll see in my deeper dive down, there's still some element of overbought, especially on the 12-week new high, new low. Here's Q Edge. I just wanted to point out 1 week performance, 5 days up here, all 11 industry or sector groups are negative. On 2 days, they're all negative. But they bounced, all of them bounced on Friday. And you could see the degree of the bounce here. And then this is the degree of the negativity. Energy was up 5.62 on Friday. Financials bounced to 3.3. Real estate was 4.53. Now, if we go and look at a month, over a month, everything is up, no question, kidding. 10 days was mixed, and then everything was down the last 5 days. If you look at the advanced decline percentage, sectors was 100% up, industry groups were 90% up, and 84% of the stocks were up on Friday. If I rank performance, you could see utilities was the strongest group on Friday. Let me make sure I got, no, back up. Sorry, don't pay attention to that. I got to get the date correct. There we go. It's supposed to be energy. Energy was the strongest group on Friday, real estate and materials. Now watch this. Worst, best, worst, best. Materials, worst, best, worst, best. Consumer discretionaries, worst, best, worst, middle. This is a market where the industry groups are going in and out daily. If it's a risk on environment, you see cruise lines, airlines, and other things that are potentially at risk if we have a slowdown coming to the top. And then you have days where risk is off and you see some of the big FANG stocks coming to the top. So this has been a very challenging market. On Friday, if I want to look at sector percentages, I could see that the biggest percentage up was 5.5 on energy, and the lowest was just a teeny up on utilities. And if, let's say that I was interested in real estate because that had a big move, I'm going to click the gears. This is going to bring up the various industry groups. And let's say I was interested in the first 4. I can now click and see what people or what peers are there. And then I could hit the stars and the top stocks in the groups, including Sabra, which is one I find interesting, come to the top. So this is Q Edge, and it just shows you how quickly you could do a top-down view. It does not have its own data. It requires a Metastock subscription, and it doesn't have its own charting platform. And I like it as a add-on for me to use with HGSI. Not that's part of HGSI, but it supplements. Let's go back to my PowerPoint. Again, I'm showing you a lot of slides, but the slides are snapshots that I took today of the market, not selling you anything. Major market, here's the weeklies, and you could see the bearish engulfing pattern on the weekly E-minis. Here is the NASDAQ. You see reversals across the board, not a bearish engulfing on the Dow. Looks like there might be one on the Russell, and the VIX had a big move up on the week, and the dollar had a bounce. Rates fall as Powell frightens. I watched Powell's speech, and I think he really took those people that were risk off in buying airlines and casinos and cruise ships and made them realize there could be a double test related to a recurrence or resurgence of COVID. I am a physician. My training is as a cancer doctor. My current life is in population health. In my opinion, and only in my opinion, which is only worth the words that I say, what we have done to date has done nothing to really stop the spread of the virus. What we did is we kept people at home so that the government could get their act together on the PPE and to flatten the number of ICU and ventilator admissions to the hospital until the government and the systems were ready. Since we don't have a vaccine, and since patients or people can be contagious without even knowing they're sick, as we have these riots, as we open the malls and theaters and restaurants, there is 100% likelihood that the number of cases will continue to rise. That doesn't mean it's getting worse. It doesn't mean there's failure. It means that we've stopped staying at home. My guess is, since no president since the 1920s got reelected in the setting of a recession, is Trump will do everything he possibly can to keep this economy humming and not to shut it down again. That means we should be prepared to continue to see spikes. Now, there is a school of thought that the summer months may beat down the infection, and you could see it's worse in South America now than it was during our winter. The caveat to that is it's also worse today in Florida, and it's about 90 degrees. So I think the jury's out on that. The good news is the death rate probably is only a little bit worse, if worse, than the flu. The difference between the flu and COVID-19 from a physician's perspective is that not everybody gets the flu, but the vast majority of people, or many of people, much more people will get infected by COVID if they're exposed. So it's much more contagious. So my 2 cents are, I expect to continue to see peaks and valleys in the rate of infection. And the thing that I'm watching to know we're out of danger are the hospitals still have beds in the ICUs, because when they fill up, that's when we're going to have a reckoning of shutting down the economy or not. Again, sorry for the editorial. I couldn't resist. So Powell made us more aware, perhaps, that the economy could shut. And what we saw was the rates, which had moved up the prior week, shot right back down. If we look at the AD lines, they're getting close to all-time highs, but they pulled back some with the markets. If I look at the NYSE, here's the all-time high of the AD line. We're down here, and you can see we pulled back, as did all the indices. If we look at breadth, stocks above the 200-day pull back quite a bit, but are way off their bottom. Stocks above the 40 are still elevated, but came off their top. The reason why I think we might not be done yet is these are the 3-month new high, new low, and we're still above the guaranteed pullback line. So do we have another couple days of weakness and then a bounce coming? That would not surprise me, although you could also work this out by sector rotation and some sideways move. If I look at the daily McClellan, what do I look for? I look at extreme readings on oscillator summation index. Nope. I'm looking at divergence of price, an oscillator or summation index. I would look for a lower high, lower low or higher high and then look for divergence. I don't see that. Or a zero line reject. I don't see that. Over here on the weekly, I'm looking for a zero line reject to occur here. If we get that bounce in the summation index, then I'll think it's a little bit better for the bulls, but it remains to be seen. Talk about how this market got overheated. Here are the buckets from this weekend, 6/12. You can see we got a 50-50 split, and most of the stocks are in the middle of their Bollinger Bands. That is a very normal, non-extended pattern of the S&P 1500 stocks. Let's look at what it looked like on Monday after hours. 45% above the Bollinger Band and 95% above the middle. No surprise that we pull back. That's why I do the bucket report, looking for extremes. Now, I wouldn't expect a Hindenburg omen until we get to new highs. But on the NASDAQ and the NYSE, notice the lack of new highs and new lows. So we're really nowhere close to a HINDY signal. Market tone. This line of red here shows that we had a kahuna, a big kahuna, and on pink, a small kahuna on every major market index on Thursday. Interestingly, not enough to switch us out of a bull mode into a more cautious stance. We still have lots of volatility. Put a check mark for the bulls. Sector strength, financials are weak, but again, all the sectors were weak on Thursday. We have finance and we have staples, I believe, that are the weakest too. Canaries in the coal mine, failed breakout at all-time highs. If we can't quickly get back above that red line, that's a bearish signal for the market. Know your news and earnings. Notice in red, I hope that doesn't mean red days in the market if you're long. Jerome Powell has his his Fed chair speeches. It must be at a Congress 2 days on Tuesday and Wednesday. There's some other Fed heads speaking as well. Big bond sales on Thursday. Will be interesting to see what happens. Not a giant week for earnings, but there are some big stocks here, including Smith & Wesson, if you need a gun, Kroger, Oracle. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Thoughts. Despite a strong start, the market at overbought levels succumbed to selling and had worse weeks since March. The S&P fell 4.8, the NASDAQ 2.3, the Dow fell 5.6, and the Russell led the drop at 7.9%. The markets rebounded some on Friday, led by small stocks. All sectors were up on Friday, but down on the week. The market failed to retest of the March, actually it should not be March highs, of the February highs. So I originally take that out. Editing as we go here. With a false upside breakout on the S&P and NASDAQ, now we see if the recent support holds or if we have a retest in our future. For the year, only the NASDAQ is up. The Russell leads us to the downside at 16.8. Of interest is the Robinhood stocks led by Hertz, which rallied often this week despite bankruptcy in the most bizarre thing I've ever seen. A bankruptcy judge told Hertz that since people are bidding up their stock, it would be cheaper. Hertz argued it would be cheaper to do a secondary stock of 1 to 3 billion because it would be cheaper bankruptcy financing than taking debt. So there's a sucker born every moment, and the folks on Robinhood will probably be buying that new offering, of which they agree is likely worthless equity. I took profits, tightened stops, bought puts on some of my positions. I'm thinking as we enter the summer, it might be time to start lightening up, waiting on the market to sort things out. Remember the sell in May mantra. Okay, so I like to go to first to TradeStation. And let's look at the S&P 500. Let's look at the 6 things I look at. Are we in a buy or a sell? On the daily S&P, we got a new sell came in on Thursday. We're still in a weekly buy and a monthly sell. So this market is long-term and very short-term bearish. Had an intermediate pullback. Not much more to say. These red dots here say that we've got MACD divergence, higher high versus here, and look at how the MACD has come down. Notice that the RSI has turned down as well, another bearish sign. If we look at the high jump, it's come down to 75%. And as I told you once, I've told you 100 times, when the high jump's at 96.7 or clearly at 100, the market's getting ready to come down. And the weekly bongo is still green, which is sort of that intermediate level. All right, that's the E-minis. How about the Dow? Does the term ditto make sense? Same. How about the NASDAQ? Same. Except the NASDAQ's got a little longer term buy that fired. 80% on the high jump. And then the Russell looks the same as the others. So these are markets that are hurting right now. Now, on my TradeStation platform, this is looking at daily views of the major market futures. And this is sort of the issue we're having is we hit a cycle high on the Dow, on the S&P, then we rolled over, and now we're forming a cycle low, although that's not the one with the red line. Cycle high on the NASDAQ, cycle high on the Dow, cycle high on the Russell. So we'll see how quick this thing reverses. But I ignore the ones without the red line. And you could see we called the bottom here in March. Did we just call the top? We shall see. Let's look at HGSI. I updated it just before I did this. If you're expecting me to give you a lot of great stocks to buy, I'm just going to, spoiler alert, you might as well hang up because that's not what I'm going to show you. There are some stocks that look interesting, but I'm very concerned about this market. So we have 27 different industry, major market indexes here. I like to put them on the top-down view, which is price and volume only. And you could see here, interestingly, the lead on the week is the IBD 50. In fact, let me just show you the group performance analysis for the week. And let me make this a little larger, I think. Notice how, this is from Friday to Friday, we've got very few groups that were up. Very few groups that are up. My holdings were not great on the week. They were down a teeny bit, more losers than winners. The IBD 50 was down 1.2. The Market Smith 250 is 1.6. The weekend review was down almost 4%, and the S&P 500 was down almost 5%. That just shows you that this was not a great week if you are an IBD 50 growth stock investor. So then you're probably asking, but Jeff, then why would this be at the top? Because it's heavily weighted on one day, and on the one day move, it had a good day, and it was only down 1.2 on the week, which was less than most other things. So let's start looking at the S&P 500. Oil, gold miners down at the bottom. Let's open up a weekly here. Not a whole lot here. That's interesting. All right, let me test something here. If you right-click and go to Edit Current View, you're going to see the window with the Eurekas and Phoenixes. I want to switch these all to the NYSE, and you're going to see why. So instead of emailing me, and I'm not complaining because somebody pointed this out, and I showed them how to fix it. Instead of emailing me concerned that yours looks different than mine, please change your Eurekas and Phoenixes to the NYSE. I think you can do it on either one, but I prefer the NYSE. And notice what's going to pop up here. A Eureka on Friday. So we actually had a Eureka on Friday last week, on Wednesday of last week, a deep Eureka on Monday, and that might be the emotional exuberance problem that Ian would often talk about. And then we had Tuesday and Wednesday, we had phoenixes or exuberance to the downside, and then another Eureka on Friday. Is that a bullish signal? It might be. Let me go over here. And so as I look at this, I see a big run off the bottom, a pullback to support. If I look at the weekly on the S&P, what was the low on the weekly? 2984.47. 30.31.54. So what's the close rather? Excuse me, what was the open there? I'll get my act to the 31.99, and the close there was, the open there was 30.38. Nope, not a bearish engulfing on the S&P 500 cash. There was, and then it went away as the market ran into the close. So what do I have here? Big uptrend, pullback to support, a Eureka coming in. This is a kahuna to the downside on this Thursday bar. Pocket pivot to the downside. Interesting, the weekly bongo was still green. No Hindenburg. Look, do I think there's more weakness to come? There certainly could be. But if you want to be on the bullish side, take that Eureka's in your favor. If I look at the Dow Jones Industrial Average in HGSI, the Eurekas are not going to change because that's linked to the NYSE. And you could see here a doji occurred today in the middle of the range. We are below the 200-day moving average, weaker than the NASDAQ. I mean, you could potentially, if you want to be careful, I'm going to draw this for us anyways. I could draw a line here, which is pretty much at the 200-day moving average, and I did it wrong. I want to hold the shift key, and then I want to let go of the mouse. Let's do another one here. So that might be no man's zone, and we might see the market bounce around in here for a while, or break down or break out. So that to me might give me some boundaries of the box that we're in now. And we were in this box here, which correlates here for quite some time. So we will see. But am I bullish on this? It's hard for me to be bullish. I'm a little bit more bearish here. It's got the sell signal on the John Person. But again, you still have that Eureka. If I look at the NASDAQ, the best of the bunch where it's just pulled back, clearly not a bearish engulfing pattern here. And again, the 50 is now above the 200. We're in a nice uptrend. I have a little bit more hopes here, but you did have a person sell signal come in. So a few days more weakness, not a surprise here. If I look at the Russell 2000 ETF, IWM, you clearly have a bearish engulfing pattern on the weekly. That's a bad, those are all very concerning. Had a Eureka on the daily, but that's the NYSE. Big volume on Friday with a bounce, but closing in the middle of the prior day. I think it's easy to be bearish here, but I'm not going to count out the fact that we bounced just because this market has been so resilient. If I look at that IBD 50 index, it has failed at the 200-day moving average. You notice that a false upside breakout above it on Wednesday, and then a sell signal came in. So that's a little bit concerning. The IBD breakouts have been performing better. And you could see it's similar to the NASDAQ, but not as, maybe worse, breaking down to the 50. All right. And then if I look at the dollar, bouncing here, as you could see, here's its chandelier stop it's about to take out. If I look at the VIX, down, 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 then and a bounce off the 200. What an opportune place for a bounce. Had a red candle high on Friday and closed in the middle of the day. That could be a reversal candle and good news for the bulls. And then if I look at the gold, with a dollar increasing, gold at best is sideways. If I look at silver, pulling back a little bit, kind of sideways like gold. And the weakest of the three were miners. And you can see the miners have pulled back to the 50. So, do you see a lot of fun places to be long? I don't. And sometimes the absence of good stuff is the same as bad. Now, if I look at the industry groups, you can see I have 175. If I look at 2-day force up, I had 15. If I look at 2-day force down, interestingly, I only had 0. Why? Because the stuff moved down a lot before Friday. And if I look at 5 days window down, I've got 99 groups, and 5-day up, I have all of 2 investment companies and electric power equipment. So most of the things, the intermediate side are down. Short term, there was a little bit of a bounce. Now, was it a risk on or risk off day Friday? It was a risk off. How do I know that? Because airlines, cruise ships, steel, aircraft, REITs, all we're missing here is casinos. Airlines. And, not to tell you what I think, getting back to half of where they were is not exactly a bull story. These planes make money when they're full. They especially make money when they're full in first class because that's where they make their money on the flight. I am a business traveler. I'm 6'5" and 250 plus pounds. I sit in first class. I buy first class seats. I typically fly about 200,000 miles a year. I have not been on a flight since the middle of February. What does that tell you about the airline industry? I did go on my first business trip and I took a car service to Sarasota and stayed in a hotel. I was at a Hyatt, a beautiful Hyatt with maybe 15 people in it, and all the services were closed. Let me tell you about laundry service in your room. You get a little note on your bed when you check in that no one's going to come in the room until you've left and you departed. And so if you want new sheets, you have to take them off the bed yourself. You put them in a bag, which they give you, the sheets and the towels, and then they'll give you another bag to bring in your room. Business travel is not what it was 10 years ago. It's not what it was a year ago now. I don't see how fast these things are going to recover. So do I think they're going to go out of business? Maybe not. Do I think Warren Buffett sold at the lows? Yes. But I don't see these as great growth vehicles that are going to go to the moon. So here's United Continental, ran up, and now it's come back, and then it bounced on Friday. I'm not buying these because I'm not a short-term player. Here's American Airlines, up to the 200 and reversed. A couple weeks ago, I said I'm not buying them. Obviously, I'm wrong. Here's Delta. Here's Spirit. They all look alike. The one I said I'd be most interested in was Southwest, and it looks like the rest. It's ran up and pulled back. I have a hard time investing in airlines right now, especially since I know the impact of business travel. Cruise lines. Well, I was supposed to go on the John Person investment seminar cruise in Southeast Asia, which we canceled. They moved it to February. We'll try and go then. So the same thing with cruise ships. Here's Norwegian Cruise. Are you ready to go on a Petri dish by the sea? Some people must be because their bookings seem to be improving. But here's a big run-up. I don't think the government's letting them go from U.S. port jets, so that'll happen when it happens. But a big run-up on the reopening and a pullback. Now, I actually bought some Royal Cruise Line on this, just Royal Caribbean, and I'm still in it, and it's trading a little bit off of its recent highs. But I'm not sure I want to be in this long term. I bought a call spread. What I probably should have done is sold a put spread because probably less risky. You sell it down here before the stock makes its move or as it makes its move. I gave back some profits on that. Truth to be told, I bought a put at the higher strike price since I was already above it. Carnival, same thing. Hard for me to get excited. So these are the things that led. Internet-based services. Well, here's a different story. Shopify bounced on Friday, traded down. This has been a big leader on the way up. And if we slow down the economy some and we go back to buying everything by mail, Shopify powers an enormous number of merchants. So this is one that I've been in and out of. I'm back in it. Short leash. Big move up off the bottom here. I'd rather be buying it off the 200 than buying it at its peak, but I came back in with this pullback. Bit Auto is a takeout, so no longer matters to me. Grubhub is a takeout at I think at like 75, so there must be a lot of discounting thinking it might not happen. Avalara, this looks interesting. Run up, sideways move. We're in a squeeze. John Person buy and a kahuna. I like this one a lot, and this is one on my buy list. Again, if I was in the mood to be buying stocks, and I'm not sure I want to be buying a lot right now. Coupa, another one that you could be buying and rather be holding it, and bought it down here. Earnings came out, they were okay, and the stock actually did okay after earnings. So internet-based software services, there's some that look good there. Electrical power equipment, nothing is above the index, so we continue on. Steel raw material, sometimes these things run. It looks to me like it ran to the 200-day moving average and failed. But the fact that it was up a lot on Friday is why it made it to the list, and it probably has a lot of volume, 13 million average sales. Cleveland Cliffs, someday this will be a good buy. Maybe it is now. It's not my kind of stock. Valet, same story. Rio Tinto looks a lot better. 7.7% dividend. Until the economy starts to pick up, I'm not really going to chase these. IT services. If this is depressing for you, imagine how depressing it is me. I spent the whole weekend preparing for this. It's just not a great time in the market. I actually own some of this, and I got to be worried now about selling it because it's broken out and it's still up. And I'm not kidding. These things have been failing right and left. You can see the weekly bongo turn green. This is GDS. I bought it a couple weeks back. That looks actually probably the best pattern of the day. And that will be it in this group. REITs. I won't buy shopping centers, but I will look at other REITs. So Vicky is in gaming, hospitality, entertainment. Some of these have opened up. So this must be that opening trade like airlines and cruise ships. Stuck its head above the 200-day moving average, pays a 5.3% dividend, and still has some earnings in the stock. I don't have a problem going into a couple of these opening plays, but you just got to beware that if we shut the economy down or people stop going out because of COVID, we'll be right back there. Alexandria Real Estate's probably a safe play. It had a kahuna on Friday. It's above its moving averages. Actually, a nice recovery on the week with a hammer appearance. Pays a 2.5% dividend. They lease to life sciences and biotech. They're not going out of business. And probably was a great buying opportunity when it got beat up. Prologis, they rent to major distributors and big warehouses. Again, companies that are probably not going out of business like AmerisourceBergen, McKesson, Cardinal Health, 2.3% dividend. Equity Residential, these guys fell with concern people weren't going to pay their leases or on the houses they're renting. Probably not my favorite of the group, too far in the lower right-hand corner. And gaming and leisure kind of reminds me of the Vici, right above its 200, pulling back 7.5% dividend. So there's stuff to like in there if you really want to be chasing. Aircraft, well, Boeing, again, the same old opening trade. Yeah, there's more to this. There's the possibility of the MAX getting certified and all kinds of other things. But I look at this, and it's had a big run from 117 all the way up to 234 and backed up, so a double in a short period of time. I think that long-term Boeing's not going anywhere, but how many airlines are going to be buying and keeping all their orders on all their new planes if they have no passengers and no cash? Triumph is a parts producer in the airlines industry. Probably tied a lot to what Boeing does, and they ran from 5 up to 14. They've pulled back. If you want to look at a cheap way to play the airline industry, this might be something to play with, but is it an opportune? No, it's not opportune. The market is still questionable here. Textron. Not a whole lot comes out and says it's in a good pattern. Agricultural chemicals, nothing above the average, so I pass. In investment companies, this is one that I can't figure this out. I got to go do some research. By itself, it looks pretty interesting, but I'm wondering if there's some kind of a story to this. When I see 57% demand supply, is this a Robinhood stock in a company that's got nothing? Health and wellness company. So it sounds a lot like the Royal Caribbean and the airlines. I'll do some research. It's got an interesting pattern. I put it on my list. Nikola is I guess since they sell electric cars, they're going to price them like Tesla. It's a Robinhood stock, 39% demand supply. I don't get it. Ferative Holdings provides infrastructure and continuity solutions, hardware, software analysis, and ongoing services. I think it was a recent acquisition, formerly known as GS Acquisition Holdings. It makes money. It's got great earnings per share growth, uptrend, pullback. This might be something that's interesting. I don't know if I even looked at this before. I'm going to add it to my buy list. Why am I including it? How many things look that good that I've shown you so far today? None would be the one that comes to my mind. I like it because it's in an uptrend. It's had a modest pullback, held at the 8-day moving average. Weekly bond goes green. It's been in a John Person buy signal since back here, which would have been the time to buy it. It's a strong looking stock, great earnings per share growth. I don't like the high jump being at the top, and that would be the only negative. Don't know Collier Creek. It's a blank check company. I don't buy those. So I hope you found a lot of things that are bullish here. I didn't. I just have a hard time buying the things that believe the virus is gone, because the virus, folks, is not gone. And I say that not as an investor. I say that as a physician who's in population health. Let's look at the buy watch, because I did find some stocks that looked interesting this week. Not many if you consider how many I usually get. So what do I do with my buy watch? The first thing I do is I go into Thinkorswim. I go to Market Watch. I find buy watch. And I go to import, select file, and I go find it. It's in OK. And here's the buy watch stocks. And I look at various indicators on them, and I can follow these stocks during the day. One of the ones that has a lot of, well, I'm not going to go there, but I look at various of my indicators, and when I see a signal that looks good, I'll look at the chart. So I do that in Market Watch. I also, within TradeStation, in Radar Screen, I put my stocks as well, so I could find new signals as they occur. So, not a lot here. We just looked at Vertiv and Triumph. Adobe, let's go to each one because there's not that many. Adobe had earnings come out. They were good. good fundamentals, strong stock. Probably wouldn't buy it up here at the high jump, but if I can get a pullback, especially down to the 17, I'd be interested. Here's that Alexandria Real Estate. Altimmune, this is a biotech stock that's been beaten down, that's showing some life. Don't know much about it. It's in the immunotherapy world, which means cancer typically. A lot of excitement in that area, but again, it's a stock that's been beaten down. I just like the pattern, so I may watch it and decide if it gives me an opportunity to buy it. Avalara, we looked at before. Baidu, Chinese Google, it's pulled back down to support. Now, you could argue that we don't want to be buying Chinese stocks here, and I could agree with that because of the ongoing issues. But if you like Baidu, this offers a good buy point. And the other thing I like about it is I can put my stop just below the 200-day moving average, probably below the low of this bar here. Because if it breaks down there, then it just destroyed my whole reason for buying it. Bellis Health, another stock I don't know anything about, probably makes medical supplies, innovative health solutions to address critical unmet medical needs. It's a recent IPO, pulled back to the 50, in a squeeze. In fact, the reason I don't have any mobile on the indice view, let me go back to here. So in a squeeze, with a new John Person signal firing, you have in a kahuna, nice uptrend, pull back to support. I like the pattern. I don't know the company. I'd probably do some research on it. Billy B, one of the few true uptrends, not quite at a new high. Mobile breakout from a squeeze, pocket pivot, in a person buy, and a kahuna. Chemocentrics is another stock that looks very interesting to me. Gapped up here on news, steady uptrend, gave you a sideways with a Bible gap up, mobile breakout from a squeeze, pocket pivot, kahuna, and a new person buy signal. I mean, that's the quintecta, whatever it is. That's a pattern that I like a lot. Cloudera, cheap stock in the cloud space, pull back some. Earnings are already out on this one, something to watch. Dick's Sporting Goods, breaking above the 200. Is it another cruise ship American Airlines play? Perhaps. But, these are a watch list. I'm not buying them all. Apps is one I gave you a week ago. It popped and then it pulled back. To me, it's in a flag and it's going to go higher, so I like it here. Domo is a internet-based communications under demand, pulling back to support. Etsy has been a big leader. It's a sort of a lot of crafts, homemade crafts. A lot of people have been buying their masks from there, going sideways. I've liked this company for a long time. Great earnings per share growth, even earnings per share greater than the multiple. I find this one to be interesting here. I'd look for a little momentum. Gaming and Leisure is one of those REITs. GDS was my favorite chart of the week, although perhaps extended. I still like healthcare REITs as well. This one pays 4.6. I talked about it before on one of my midweek calls about the Medicare stimulus given to practices to keep them in business. So I think they're going to probably pay their debts and their rent. Meridian Bioservices. This is a life sciences, a testing company. Pullback here. Looks to me like it could be getting ready to go. Net Element. This is probably a Robinhood stock. Huge demand. I just put this there so I look at it. I would clearly not chase this until I understood a lot more about what's going on. But this kind of looks like, when I say Robinhood, it means stock being bought by amateurs where there's lots of them and they buy a couple shares a pop. But it leads to these big volume moves. PAGS is a internet-based services computer processing company. Above its moving averages, everything's heading the right direction. You can see the group strength here. Gave you a little bit of pullback. Break above this prior high, I might be interested. PennyMac showed up because it pays a 10% dividend. It's got decent earnings per share growth, and people are refinancing right and left, and the housing industry is strong right now. Perspecta is an IT company, which I liked a lot. New person buy signal, mobile breakout from a squeeze, pocket pivot, and Kahuna. That's, again, when I see all those things fire, I get excited. Prevention Bio, I'd like to see it take out its chandelier, so it's something I'm just going to watch. Quidel, they're involved in clinical trials. They've got a play in the vaccine development and drug development for COVID. Flagging here, pulling back. I'd be looking for a breaking above a trend line, but this is one that's been an amazing performer. Look at the earnings per share growth. Look at the multiple. Amazing performer that may have more room to go. Triumph we looked at. Veritiv we looked at. Vicky we looked at. And this is another one of those I called out Robinhood stocks. So that's my look through the market. There's a lot of things here that are kind of crappy. If I had to look at buying something, and I don't have to buy every day, neither do you. Probably the thing that interested me the most, let's just take a look at it, and then we'll say goodbye. Let's look at Perspecta. Now, I'm likely to talk myself out of it, not into it, but let's take a look at it. Let's go into my advanced screener. So I have a stock that has been going sideways on the daily with a new buy signal. That's good. It had a Roy Kelly cycle bottom put in. I know from this that it had a viable gap up, pocket pivot, mobile breakout, no squeeze, PSAR reverted, and a green can and a what is this one? This is a Kahuna and a force fired to the upside. So a lot of strong signals. I look here, I see the volume is turned up here on the OBV. Person volume here, kind of sideways. Weekly OBV is broken out above its moving averages. Weekly person volume is high. I like Perspecta. Now let's go look at it on the Q charts. And what do I see? Weekly backdrop is blue, which means I could buy it. Look at the power of this move coming in. And here I have a bullish release signal, I believe, or is that a stretch? A bullish stretch. Okay, that's a bullish signal, a new person indicator. I broke above this downtrend. It'd be nice to set my buy stop above this trend line, which is at 25.43. So I might set my buy at 25.50. Look at the volume came in. I think this looks interesting. If I had to be chasing a stock, I'd be looking at this one. And I wouldn't have a big target. I'd take it a 20% move up to 30 quickly and take my profits. That's the market we're in. On that note, I'm going to say goodbye. Have a great week. Trade safe. You don't have to trade often. This is not a great bullish time in the market, but this too will pass. Goodbye, everybody, and thank you.